Today I'm joined by two guests who are building the financial infrastructure for a world many hope is possible, but not many are actually building. Cameron Neal is the founder and CEO of LendForGood, a platform revolutionising how impact-driven businesses access capital. After years establishing Australia's fair trade movement, Cam noticed something broken in how we fund impact organisations trying to solve real problems. They were forced to either constantly chase philanthropic support, which many know as grant reliance, or sell equity too early, often compromising their mission. His solution? Create a global crowd lending marketplace where ordinary people can directly fund enterprises making a tangible difference. Working alongside Cam is Holly, who brings a unique perspective to the business because of her age and experience working in Asia. What makes this conversation particularly interesting isn't just because of what they're building, but who they are as people, how they work together, and what they can teach us about the importance of diversity, even when assembling the first people for your growing teams. Cam, a self-described dad, servant and builder with decades of experience creating movements, and Holly, who at a coffee meeting with Cam realised she might have finally found a place where she could be herself after trying, perhaps failing, or at least not wanting to fit into Singapore's very traditional finance world. Cam and Holly, welcome to Chasing Financial Equality.
Hi, Kane. It's excellent to be here. Thanks for having us.
Now, because we only have 40 minutes and I know better than to ask a founder of a company for a brief introduction, Holly, I'm wondering if you might explain what LendForGood is.
Sure. Sorry, Cam, if this is not the script and succinct elevator pitch that you have practiced for many years. LendForGood is a crowd lending platform. So the way I describe it to people is that it's crowdfunding, but for loans, and specifically impact loans. It democratizes impact investment in two ways, both for the investors and for the investees. It means we deliver a financial product that actually works for the end user as well as the people funding it.
Wonderful. Now, Cam, a little birdie told me that when you first spoke with Holly, there was a specific moment where you recognized something special that went beyond qualifications. What were you seeing that made you think Holly was the right fit for LendForGood, despite maybe not having the same kind of experience that other people you spoke with had?
There was this understanding that I could see of what we were on about and the belief in the purpose, right? I think when you're hiring someone, especially early, which I've done multiple times, it's that wow factor, that culture factor that ultimately sways your decision. And I'm quite an instinctive person, but there was something there in that collection of some experience, some previous experience in fintechs and in impact fintechs in particular, and in startups. But I think I just resonated with someone that understood the reason behind the why. This wasn't a job. This was an extension of what I saw Holly was trying to do with her life.
Yep. We hired one of our first team members, and I was actually on a holiday, and so one of my co-founders made the decision, and she sent me this big report after all of the interviews, and I said, "Do you have a gut feeling?" And she said, "Yeah, I know exactly who I want to hire." I said, "Then hire them." I think that's all you've got at the start of a business a lot of the time is that gut instinct, and it's why you start the business a lot of the time, and I think it's really important to focus on that.
True. But I think I was just going to reflect on that, Kane. I think in my experience, when you get to a shortlist, everyone's qualified. What you're looking for at that point is the culture, is the gut. And, I think that's, I've as I said, I've hired in lots of places and it's worked for me.
Holly, there was a day when you had both a coffee with Blue Orchard and your interview with Cam. What happened that day that made you cry and feel energized?
Yes, it was a big day. I'd been in Singapore, I think, 3 months by then, after a year of backpacking, pro bonoing, living, learning in South and Southeast Asia. I was really, really tired. And in the morning, I had a call with Cam, and I find it funny to call it an interview, and I found it funny on the day as well because it didn't really feel like an interview. We just chatted. And I guess that's kind of what Cam's talking about. We were on the same page immediately. And after all these calls and coffees and meetings and interviews and applications for jobs in Singapore, it was like I was speaking another language. Like nobody understood my skill set and what I had to offer. They didn't understand my portfolio career of 3 years, and one of those being a career break. How bold to be so young and take a career break when I've not even got a career yet. But they just didn't get me, and I didn't understand where I fitted in yet. And I was running out of money, and I was having to make decisions about, do I go home, do I keep trying? It just wasn't an interview. It was just a chat. And I was like, well, my experience and my day and my hope for finding work in this region, whether it's remote or actually in Singapore, I was like, oh no, there is something. It's just there's just not many of them. And yeah, and speaking really freely and feeling like somebody got it, and they got me, got each other, and we got what this is all for. And that was amazing. And then in the afternoon, I had a coffee with Blue Orchard, and it was like the millionth time somebody had asked me, why are you trying to be in Singapore? Like when I'm expressing that it's hard with visas, and it's hard for people to understand about impact investing. Sometimes I'm telling people what impact investing is, who are my potential employers. What do you mean you don't know? Given the position I was applying for, I mean,
I know many an impact investor that doesn't know what impact investing is.
yeah, to be fair, yes. But it was just that too many people asking me, like, why are you bothering? And I couldn't really answer. And I just cried. I just cried at this poor lady in this coffee. And it's because I'd had that amazing call in the morning. I was like, because of this, because I'm hoping to find this here. And well, I mean, it worked out remotely, and I've curated something in Singapore since. Yeah, complex day.
There's obviously a question now to be asked. You grew up in Essex in the UK, and people were asking you why Singapore. So what draws you to Asia?
Um, I've always felt a pull east. My parents are from London, Essex area, and grown up with South Asian people and family and friends around me. So I've always had an exposure to Asian cultures in my life. And my mom's an avid cook, so there's always been different flavors and spices and smells in the house. And then going to university at one of the most international UK universities, like it hasn't ended. And I've been very fortunate to get to see a lot of the world too through scouting, which is it's not a holiday, it's a real experience. You pay to go, but you're volunteering, you're living with locals, you're immersing yourself in the culture. And my first job was in impact investing, but because it was a startup, we could the way it worked, we only really were investing in publicly listed companies and in developed economies, right? So like how truly impactful it was. We were always really conscious as a founding team that we weren't hitting where we wanted to hit yet. And so when that company unfortunately closed, I was like, well, I'm just going to go there. I'm going to go to the place I want to make an impact in. I'm going to learn for a year and get the context, understand where I fit in, understand my colonial heritage and how that plays a role too. And then at the end of it, try and get a job. And Singapore seems like a good place to do that. It's where the power is for Southeast Asia. But the proximity to impact is very much still there, and that's important to me. I don't want to learn about Asia and then go back to the UK and try and make a difference from there. I still want to be in it and close.
I've heard wonderful things about the impact ecosystem in Singapore. Unfortunately, at the tail end of my recent trip, I got ill and had to cancel my Singapore leg. So still on my list to get there. Cam, your WhatsApp bio says dad, servant, builder. How do these three identities guide your work? And who are you serving?
I think at different times in my life and career, you kind of have to figure out what it is that you do, right? I remember a decision point with my career when I was 6 years deep in at fair trade, right? I'm like, okay, I can be a trade guy, fair trade guy. Like I could just do this because this is big. This is significant. This changes people's lives. This is really important. Like, am I that? Am I the content? Am I the particular vertical? Or is this another example of I've built a thing and now I'm ready to leave and build the other thing? And I decided it was the latter, right? I decided that what my career is building things that matter, building organizations, networks, enterprises. And that's what I've lent into. So I'm a builder, not of chairs or tables, but the human systems and networks and movements, causes, organizations. That's always been in servant to something that's outside of me, right? Like I'm not building it for me. I'm not building it so I get to buy a Porsche. I'm building it because it needs to be done to serve a purpose, right? Everything I've built is been in service to people, a particular group or a particular cause, the planet as a whole, or however you want to conceive of that. I think it's how I also try and approach my leadership. Molly can reflect on that. I think it's how I approach like being a parent and a partner, is that I kind of do what needs to be done in service of the thing I'm trying to achieve, like the higher objective, right? And even as a dad, you can sometimes being a parent, you can definitely feel like you're a servant, running your kids around to soccer camp for the last 2 days, like you're the Uber driver. But like I'm being more philosophical about it, right? I feel that it's how I turn up in the world. How I turn up in the world is to create things that matter, build things that matter, build it with other people. You can never build these things alone, but to do it from a real base of service. It's not about me. It's about what are we trying to do? And the same, I think, as a parent is, it's not about me. It's about what do they need? What do they need in the world? That's a big motivation for me, having become a dad. Some days this stuff is really, really hard. As you know, Kane, I owe it to my boys to give it a crack, for me to look them in the eye and say, well, here's what I tried to do and how I tried to make it so that some of these bad things can be less or some good things can happen in your lifetime, right? I'm a very big believer of that. Social change is a big generation thing, right? Anything I'm achieving now is because of what 2 generations have done before me. And so I have a role to harvest that crop, to have that success. But I also have a role to tend to the harvest for people who are going to come after me, like Holly, for them to have success, and also to till the soil and plant for what's going to come after both Holly and I, right? And like, as a social change maker, I take that role really seriously around the multi-generation work. This work is never done. We're never going to win. It is just an ongoing cycle of fighting the good fight. You need to do that in a way serves that multi-generation approach, that serves the future, because I'm not as arrogant to believe that I can achieve everything that needs to be achieved in my lifetime with what I have available. It's about an ongoing wave and generations upon generations of people that work to strive to make it better. And my place is in that. And I serve that, I guess, that higher purpose.
Speaks into that well-known Chinese proverb that if the thing that you're working on can be achieved in your lifetime, you're not aiming high enough. It's one of my favorites. But mostly from your answer, I think I've got a new answer of my own when people ask me why I'm not having kids. The real answer is I'm pretty terrified of the state of the world, and I'm not yet confident that I want to bring people into that. But maybe I could just say I don't want to work for other people.
Yeah, an element of that for sure.
Holly, coming from your generation and having worked in Singapore, how do you see attitudes toward finance shifting among younger people interested in impact?
Yes, I like this one. I can't speak just for Singapore context, but something I can see pretty globally. I'm Gen Z for the listeners. I'm only 25, so the eldest Gen Z people are 30. That's where the eldest cutoff is right now. And what I think is a bit different about my generation to generation previous is that there's always a social justice cause. Like Cam said, there's always something that each generation has fought for or fought well and progressed in. And it was because of the generations before that progress got to see fruition and all this kind of thing. My generation has decided to not take any nonsense on any value, to make decisions based on our values in every aspect of our life and to hold those with power accountable. So we don't take subpar performance from governments, corporates, people with power, our parents, our peers. We don't take subpar performance, but we also are part of the change. And I think that's really exciting when it comes to finance. People are recognizing that finance is a tool for change. And that was a big part of me moving from psychology and working in finance, being an activist that was basically anti-money, to being an activist that is now a financial activist. That financial literacy piece is a huge part of it. I think it's really exciting because it kind of says for the change that we want to see and for everything that is coming, finance is going to be a huge part, and there's an opportunity for change there, an opportunity for progress and growth. If we think about the great wealth transfer, that's the largest sums of money are transferring from one generation to the next than we've ever seen before. And millennials and Gen Zs are going to inherit this. For the first time, over 50% of all the world's wealth is going to be held by women. The decision makers, when it comes to money, where it's spent, where it's saved, where it's invested, and the demand on financial services and financial advisors, wealth managers, etc., is going to completely change. That's what I think is really exciting about the future. If money makes the world go round, finance is the source of all good, or source of all change, not just the source of all evil, and the people who are wielding the decisions around money are values driven, then that gives me hope for the future.
Something you said really speaks to me. When I was young, one of the things that used to bother me most was the frequent quip, you have to respect your elders. And I hated that from a young age. And I'm not at an age anymore where I experience age discrimination, but I certainly did for, the most of my 20s being in finance. And nowadays, when I hear someone say the words, you don't hear it as much anymore, thank God. But I hear people say, respect your elders to someone young, and I've been known to say, have they earned it? And I think that's the missing second piece to that saying.
Yeah, but it makes me think of kind of the inverse, which is something that I like. If I had £1 for every time someone said this to me, well, I'd be investing very well. Because people always say to me like, "Oh, I'm so like I love your passion, blah 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 blah. Your generation is gonna save us." And it links back to what I said before. Like, if my generation are gonna save us, the eldest person of my generation is 30. How much power do people 30 years old hold? Of course, you've got some very high flyers, people with generational wealth or have done very well for themselves in their first, few years of career. But ultimately, politicians, C-suites, all of the people that actually hold power and influence, they're not 30-year-olds, like 20 to 30-year-olds. Yes, challenge things like respect your elders, but also every time you hear someone say that the next generation or the youngest generation are going to be the ones to really do it all, challenge them on that as well, because I think, and it relates to what Cam said earlier, it's an intergenerational thing. I liked the harvest metaphor, but I also say it's not passing the baton, it's we're all on the same rope and we all keep chugging along, pulling, and at different parts of our life, we can show up differently. Right now, I've got zero responsibilities except myself. I can get on a plane with my backpack and go to a volatile market with job instability right now. I'm happy to do that because my next chapter of life, I'm not going to be able to do that. I'll show up very differently in the cause for social justice. It is intergenerational. There's wisdom to be passed up and passed down.
We're quick to abdicate responsibility when it comes to the hard work a lot of the time. Cam, you described the market failure you're addressing as the missing middle. Can you explain what happens to impact enterprises that are caught in that gap?
Found my way into this, Kane, was when I was at Fair Trade, right? And I was working with courageous business owners that were like, yes, we need to take responsibility for our supply chain. Yes, we can have amazing impact with the workers and the farmers that we're buying from. What they experienced, because part of the fair trade thing, it's about trade, right? So quite often they pre-finance their growers or their workers, like to say, I'm going to buy this from you, and I know that you need money to actually execute that. So I'm going to pay you 2/3 of the price in advance, right? So then business is there going, okay, great, I'm doing the right thing, but how do I get money to grow? I have no money to invest in marketing. I have no money to invest in growing my sales or my sales team, all this kind of stuff. And so what I learned very quickly in that world is you had impact businesses that clearly were doing great stuff, but they just couldn't do more. They couldn't do bigger. They couldn't do better. And quite often, they had them trapped in the poverty trap, which we know too well, is that if you don't have enough money, everything costs more, right? And therefore that just traps you. That's what happens to a lot of impact businesses that I've seen, is they just can't get to the size that the unit economics of their business begin to change, or the impact potential that they've got gets trapped. In the worst case, it's not just that they get stuck around $500,000 or $1 million a year turnover. It's that they actively go backwards. There's a window where they could have been successful that they just couldn't take advantage of because they just couldn't access the money that they needed. What I've come to understand from that early experience, which is kind of what led to starting on this whole thing of crowd lending and crowdfunding to fill that gap, is that's not unique to impact. That's small business generally in the world, right? Worldwide, micro, small, medium-sized businesses just struggle to access capital they need to grow. They're not seen as a good investment. It's risky. It's too small. I can't make enough money. My cost of due diligence is too high. And what that means is you have amazing businesses everywhere in the world that are micro, small, medium size, that are just starved of capital because they're too small, because what they're doing is not going to make the people with the money enough money to be bothered putting money into them. That's what it boils down to at the end, is I'm not going to make enough money from putting my money into you for me to be bothered. I will go and find something else. Our banks have gone that way as well. We think, you still see movies and nostalgic, the local bank manager you'd go and speak to, and they'd try and figure out how to help. At that point, money was about, how do I help you achieve these things, right? As a small business, what can I do as a local banker to help you do that? Because what you're doing is valuable to the community that I'm a part of, that I live in. Your small business, I buy from it as a local banker. As everything's been globalized, everything's been disentangled from that local communities, it's just not the driver anymore. The driver is, how do we make money? Even hearing in the last couple of years how in Southeast Asia, in one of the countries there, they went from having 50 odd banks to 7. There's this whole consolidation of banking sector, which creates even more of a missing middle, Kane, because those consolidated banks now are chasing higher loans that they want to put out to make more money, because now they're bigger, now they're consolidated, now they've got a board that's trying to maximize profits. The gap for $25,000 loans, $50,000 loans in those countries is now even bigger than it was. When we talk about this, it's globally understood. Emerging markets, the missing middle for small, medium-sized enterprise is like $5 trillion a year. But that's not getting smaller. That's getting bigger as we're seeing consolidation in capital markets and finance markets of what they're looking for and what they want to invest in. That is whole communities. I think it accelerated during COVID. What we saw happen in COVID is Wall Street flourish and Main Street die. In general, and I talked about this a lot at the recent Impact Investment Summit, what we have seen increasingly is that across state, market, community, which are the 3 kind of areas where we organize, make decisions and have impact, markets have hollowed out community to maximize profits, and they've captured the state in order to do the same, right? And we've got this complete out of whack system where community and what works for communities, small businesses, Main Street, is sacrificed in order to maximize profits of the big market players. And that missing middle is a symptom of a system that does that. And you can understand why it exists when you understand that what they're trying to do is maximize profits. But that just leaves millions and millions of founders, micro businesses, small business owners starved of capital that would make huge difference to what they can do with their business and the communities that they serve, the communities they impact. And that to me is compelling. That's a significant TAM, total addressable market here of like $5 trillion per year and growing of the missing middle, right? Like that's something that, and again, we can do what we're doing at LendForGood to try and fill that. But ultimately, that's not a systemic solution for changing the way the whole operating system of finance that is only growing the size of that problem, right? We want to try and fill that and help more small and medium-sized businesses bridge that missing middle and find the capital they need. That problem's only getting bigger because of the way the finance system as a whole is organized, right? And so I went into this, Kane, Holly mentioned psychology degree, and I know you've got a healthcare background as well. I came to this because I did a psychology degree, and I guess a metaphor that we heard at uni was around the people are coming over the waterfall, right? And as a psychologist, you're really at the other side kind of going, oh, how do I help? You're kind of triaging the outcomes. And I'm like, why are people coming over? That's what I'm interested in. How do I stop that? How do I stop that? That seems more important than what's happening down here. There's more people coming. And it doesn't matter how many of us down here are organizing to help. If there's more people coming, like we're losing.
As a former paramedic, I like the phrase, it's cheaper to build fences at the top of cliffs than it is to pay for ambulances at the bottom.
Yes.
But I want to come back to something you said early in that answer. One of my friends, Erinch Sahan, was the former chief executive of the World Fair Trade Organization. So we do a lot of talking about fair trade, as well as how we have inverted the role finance plays in our society. One of the problems we face in this domain is the concepts we talk about, whether it's economics, whether it's finance in inverted commas, they're all very meta. They're very large. They're not tangible for an everyday person. How does that relate to my day-to-day life? But I think what you said before about the bank manager, I think anyone sort of alive today in a Western sort of economic context has heard someone talk about, hey, when I was young, I would go to the bank manager and the bank manager would ask my business plan and he would ask what my collateral was, but he was interested in knowing what my business was contributing, not just economically to a balance sheet, but to the community. How can I, as a business, as a bank manager, help this person contribute to our shared community? It sounds like if we try and relate that back to our everyday experience, we have a whole bunch of global bank managers who are now saying, well, how do I make money out of the people that are coming to me, rather than how do I help the people that are coming to me do more with their work and impact other people? And I think that's a really interesting synthesis of, I guess, a meta problem, but at a local level.
Yes. And I think that's right. I think there's many benefits of globalization and technology and stuff. But I think one of the downsides has been that it has abstracted our community from us. In some people, it's irrelevant what happens in their community for the way that they live and the way that their well-being and their economic outcomes and stuff, which can be good or bad. But, I think losing that sense of I'm part of a community, this is my place, I need to look after it. I think us as humans have, one of the things, again, from my psychology degree and reading and stuff I did earlier in my life was, something that I see again and again is that the technological innovation outpaces social innovation, right? And I think us as humans, what we've evolved to be able to do in terms of relationships, in terms of meaning, in terms of stuff, it can't deal with what we can now do from a technological point of view, right? I just don't think we have evolved mentally, emotionally, socially to kind of fully integrate with that as yet, right? And so it's challenging, maintaining a local community, place and connection. And that's why I do see a lot of potential in kind of place-based approaches and community-based approaches. But it's one of those things when I talk about what LendForGood does, it's about at a meta level, yes, we're trying to fund, businesses, and connecting motivated individuals and lenders to them to kind of lend them their support. But our theory of change is how do we rewire finance to benefit Main Street, not Wall Street? Like, it's how do you kind of enable individuals to invest in the things that matter to them? How do we equip communities to invest in the things that matter to them? Not what matters to one of the big four banks in Australia that's trying to Commonwealth Bank, $9.8 billion of profit last year.
We have a society that is in service of finance instead of finance that is in service of society.
Exactly. And that's what we're trying to stimulate. And a lot of, and I know you've spoken about this as well, Kane, but a lot of what I see the meta piece of our work is about igniting imagination as to what it can, not just it can be different, but there are actual things that are making it different. And you can invest in those things and get involved in those things as practical things about how we change this narrative, how we change the way that we're imbalanced. It's not that there's nothing going on. It's not that that's all woe is me. Like, there are people, and that's what I was saying to you yesterday, there are things that exist and movements and organizations that have been around for decades now and some longer that are significant alternatives to what we're currently experiencing that are better. We need to find those, work in them, invest in them, help them grow, right? Because again, I think it's a feature, not a bug, of this new economy that we're trying to build, that it's distributed, that it's small, that it's diffuse, right? And so it's everywhere and nowhere at the same time. It's not visible because it's small. It's not it's not a Facebook, right? Like, it's not big, everyone uses it. It's small chunks that are local context, community. And I use the kind of mycelium mushroom example, right? I think that's what we're trying to build. And we're trying to build these connections between multiple nodes that can nurture and feed each other beneath the soil and help. But they're not trying to be trees. They're not trying to be, massive things. They're trying to be locally contextual, impactful, supporting communities, serving communities. As you said, finance serving people as opposed to the other way around. And in doing that, I think it's just a different approach. It's small, it's networked, it's everywhere. But it does very often feel then for traditional views that, well, it's nowhere, there is nothing. And it's like, well, that's not true. It's everywhere. It's just that you don't know about it. And I think that's really important that we understand that as you've gone on your journey, Holly, around the place, like, you've found these nodes, right? Like, sometimes it's hard to find, but they are there, and they are trying to do everything that we think is important. And they're trying to do it without many resources and without much support. But it is there, and it's grounded in people's values and who they are in their communities and in service.
Holly, you've written or spoken about being a rainbow in a grayscale palette of traditional finance. How does being at LendForGood allow you to bring your full self to work?
Yeah, I've never fitted in. I remember I've been speaking to my mum recently about this and having big catch-ups and reflections as all four of her children are coming and going. It's coming up to Easter, so often we flock back at this time. And yeah, I've never fitted in, never done things the normal way. It either doesn't suit me or I don't think it's a good way of doing things. And I don't know why, but I just never had that kind of inhibition that said, oh, you can't do an alternative way, like you must do it the normal way. Because if it just doesn't work or it's stupid and I have a solution or a different way of doing things, then like, let's do that. Let's build, let's problem solve. Let's not just say poo-poo, that's bad, or like, poor me, I can't do it. It's, I just can't do it like this. So yeah, I mean, I really appreciate, and I wanted to say this after what Cam was saying about systems change, and with systems that are problematic and trying to change those systems, it can be really hard to know what to do once you've realized what's wrong. Like, you know it's not working, and you can kind of articulate, oh, it's the way the finance system works, and there's the missing middle, and that's the kind of, and it has these consequences. But so what do I do now that I've come to those conclusions can be really challenging. And what what I love is that I just found a LinkedIn post written by Tom. I saw what he was building. They needed someone. I said, I need what you're doing. I'll help you make it. And that is my answer to my first job. That's my answer to every job I've ever applied for and got, is that I like what they're doing and I need it and I see the value. And so I want to be there. And I get to speak freely. I contribute my ideas. Cam sometimes says, yeah, well, there's a reason why we do that. And I listen and I hear why they've been doing that in the 6 years that they've been building it this way. But then other times I say things and they're like, we didn't think about that. We'll discuss, we'll think about it, and then maybe it gets implemented or maybe it doesn't, and we put it in the wish list, or we have a group discussion. And I really value that I can be valued, even though my part is relatively small compared to what the founding team have done to build where we are now. Sometimes it is essentially paperwork what I do, right? But the consequences of the paperwork really, and how I get to do it and how I get to show up is great. It is effortless, even when it's hours of Excel.
Cam, I want to ask you some more technical questions around some common themes I've bumped into in both the startup ecosystem and the financial services ecosystem in the past decade. And one of those things is the inconsistency in the context of a fintech startup with the overarching methodologies of building almost any other type of startup. And that is in the sense that you build your MVP, which I say you build it quick and shit, and you iterate, you test and iterate, and then you build it out from there. You get your validation, you raise more money, and you get more validation, and off you go and you scale. And that's this thing. It's a rinse and repeat thing that exists in all types of startups, especially tech, with the exclusion of STEM, but also fintech. You've got to have really significant regulatory frameworks, right? Now, you operate in areas that are a little bit different to traditional finance, and that puts you in regulatory grey areas. Can you talk about navigating an inconsistency between what people expect a startup to be able to do versus what a startup in fintech can actually do versus what a startup that is in maybe an untraditional space of fintech can actually do, and how you go about really bringing people's expectations back to what you can actually do?
It has been tricky to navigate for all the reasons that you've just said. I think I've mentored and taught like in startups, right? And like everything you just said around, if you're not ashamed of your first MVP, you launched too late, like, like all that stuff, right? And I think, what it's meant for us is we've resisted being kind of put in the fintech camp, because we're using finance and we're using tech, but we're a movement. We're trying to achieve a thing. And as a group of founders, I guess at different inflection points and decision points, when we've been faced with different hurdles, it's come back to what's the problem that we're solving and who is solving it. And so we need to move. We know we can do this. We know it's possible. We can get people on this side who want to support borrowers, and we can make it happen. Can we do it at scale? We're going to need probably different tools than what we need to do it for 10 people, right? But it's like, okay, well, we can do it. So when we looked at this, we're like, well, why? Again, part of our analysis as to, well, why does the missing middle exist is because the problem we're solving and regulation is orthogonal to each other. Like they are just at loggerheads. One of the reasons why the missing middle exists is because of the way that regulation works in nation states and the way that stuff happens. Regulatory capture, I often refer to things now as the global wealth defense industry. Regulation supports those with money to protect their money. It's not designed to solve social problems. So our perspective was we have to do what we can to do the right thing and protect people's interests, but we cannot let it stop us solving the problem. And our sense was always, if we go down the path of complying with regulation in the fintech space, it will be crippling to be able to do what we need to do. They are just not compatible for getting started. And again, so what we did is we approached this as MVP, let's build. We went out, we actually raised money to get a platform to do it and use technology from the very beginning. That took forever, and we made the decision, let's just do it. Let's use Excel spreadsheets and and PDFs and emails, and let's just start doing it. Let's start moving money. And that was crucial, because after 18 months we fired that developer and got our money back and started again. And if we had waited for a platform, we would have died, like, at the beginning. But we did that in the end, Kane. We just went, let's solve the problem. How do we do that? Let's just move the money, and we'll just figure it out. And so we did. We did that, and we did our first 2.5 million without a platform, right? And it's only been in November last year that we launched the platform finally to do that. But again, we're just really clear to do what we're doing globally, to have global borrowers, to have global syndicate leads, to have global lending community. There isn't a regulatory system that says, we have you covered. Like, come and talk to us. We offer a global license. Like, there just isn't, because everything's done for nation states. It's nation states trying to collect tax, trying to protect their consumers. And so even if we'd gone down the path and spent the hundreds of thousands of dollars on having an AFSL, it would be completely irrelevant to where we expect to be. Like, when we're successful, we think Australia will be such a small part of our lending community and our borrowing community. It's like, well, what are we doing? And what we want to be is we want to be regulated at the scale that we want to be. When we're doing $1 billion a year of impact lending, and we're doing that in a digital native environment, and it's, smart contracts and digital wallets and self-custody and all that kind of stuff, like, then we're hoping that there'll be some global regulatory thing that's caught up, or some jurisdiction that will allow us to operate in, that will give us the ability to do this at a global level. But we've continually come back to, Kane, is why do we exist and who else is solving this? And the answer is no one. And so, ASIC knocks at my door. Hi, guys. It's like, who is solving this? Like, if we're not doing it, who is? Like, and who are we hurting? Like, the lenders are here voluntarily, borrowers are turning up. Like, everyone's doing this as informed adults. Like, we are doing KYC, we're doing beneficial owner checks, we're doing all those things that you'd expect us to do, but you don't have a way to enable us to do it. And I think that's part of innovation. It's part of pushing the boundary. We celebrate now Uber breaking all the laws that they broke to be successful. Airbnb, regulatory, they find these regulatory gray areas and they go hammer and tongs, and they $1 billion capitalization. Everyone's like, oh, amazing. Like, it's that, right? Like, yeah.
We talk about regulation a lot. We've got quite a few investors on our cap table that are either current or former regulators. And one of the reasons they've invested in Maslow is because inherent to our model is we go straight to the intent of regulation. And I think it's really important in the context of regulation to consider the intent. Why did a government, why did a subordinate authority implement a specific regulation? What was its intent?
Yes.
And it's usually to protect people that don't hold the dominant power position. And so if you are serving them as well, I think it's a really important thing to get the regulator to say, hey, what's your intent here? Because we might have the same one.
Yeah, exactly. And I guess that's, what we've looked at is, what do people care about globally? We care about, well, who is earning the money? Who's the beneficial owner here? It's not a terrorist group, so we've kind of taken on board what we think are the reasonable things. We've lent into contract law because that's probably a universal language. So, like, it's not that we're being reckless at all. It's being very informed and very, very deliberate. And we've got legal advice and we've sought, advice from regulators, etc. But at the end of the day, becoming a licensed entity and going the regular path was just orthogonal to achieving the impact we wanted to achieve at this point in time. And being a startup, we would have had to raise substantially more money to spend the $250,000, $400,000 to go through the process of getting AFSL, or going down the process of $150,000 to become a car, all those other kinds of things. We're just like, the money's better spent right now on other things that deliver the mission, right? And so it's been very deliberate decision making to do that. But it's very much came back to what you were saying at the beginning of that question. We're walking in multiple camps. We're a startup, we're a fintech, we're a movement, we're trying to serve impact. And as you're doing that with the startup mentality of, how do I just get shit done? Ultimately, I need borrowers to access capital. So how do I do that? And doing it now, but building towards something that will scale and that eventually will become commercially viable and self-sustaining. We have an obligation to the world, to this missing middle problem, back to that servant thing. We need to serve that, and we need to make sure what we do and the regulation we subscribe to and the systems we have serve that purpose, and don't, from unintended consequences, get in the way of solving that.
As we come to the end of today's episode, I'm going to ask a question, but I'm going to let you both hold it for a second because it's a big one. I'm going to ask you both, if you could make one change in the world right now to have the biggest impact, what would it be? However, you only get 1 to 2 sentences. As Holly is thinking about her answer, Cam, can you tell me, if people want to get involved with LendForGood, where can they go to find out more?
Best place is just to land on LendForGood.io. You'll be able to read about what we're doing. You'll be able to see the loans that we've got live, the courageous impact enterprises that are out there that are looking for your support. You can see the ones that we've done in the past. Couple of clicks to register and sign up as a lender. I just mentioned, KYC, there's a bunch of that stuff to go through the first time. But once you're in and on our platform, you'll just find all these amazing founders that I've got to know, and all these new ones that will come, that you'll just look at what they're trying to do. And again, there's no obligation. You make a decision.
What's the minimum amount I can get involved with?
Typically, it's $500 as a minimum contribution. But again, it's up to you. You decide. You look at something and decide whether what they're doing, the impact they're doing, where they're doing it, their financial story, everything. You decide. You're in control all the time. It's your agency, right? But have a look. There's no fees to sign up. You can join and begin just to experiment and have a look. Build a portfolio. You'll meet some amazing people.
Thank you. Holly, if you could make one change in the world right now to have the biggest positive impact, what would it be?
I don't know if I'm interpreting change correctly, but what I think would make the biggest difference is for everybody, if there's some global learning that we can do, if everybody improved their financial and political literacy, those are the 2 biggest things that will change the world. And everybody can start right now. Listen to the episode. Improve your financial literacy.
Cam, for you, one change that you think would make the biggest positive impact to the world right now?
I think it's political. I wanted to say participatory democracy. I don't think that's enough. Maybe removing money from politics.
Good answer. Cam, Holly, thank you so much for joining us today. It's been an absolute pleasure.
Thanks for having us, Kane. It's been great.
Thank you.